On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray and we are back at it again with another episode of Portfolio Updates. The numbers are in. We've got our monthly numbers from the month of April. Jeez, we're in May. I keep having to remind myself. Time is flying here. Before we jump into the numbers, let's remember to hit that like button on the way in. If you've been here more than 2 times, I want to welcome you to the Wolfpack because you're a part of it. Go ahead and hit that subscribe button, turn that bell notification down below to all on. For those of you who are already in the Wolfpack, just a reminder, share the video. We're not trying to get rich over here by ourselves. There's always room for more people to tap in. So few people actually utilize this information that honestly, there's no reason to keep it a secret. There's so few people out in this YouTube space that are telling the truth, that are showing you actual numbers, that are showing you actual money being made. So again, our small little corner of YouTube over here is ever growing. There's always more room. These are not secrets. This is literally me telegraphing my moves to get to what some would consider fire state, financial independence, ability to retire early, and more or less the original ethos of me starting to track these metrics is my journey to becoming to getting that first million, to climbing that mountaintop. Because apparently at $1 million, which apparently isn't what it used to be, that's when people start shouting down the hill at people. So, I figured why not document the journey up the hill, because the information's a tad bit more relevant because it's boots on the ground, maneuvers that are being made, strategies that are being implemented, and whether they work or not. So we're going to go ahead and jump into it. I'm going to go ahead and pull to the screen for those of you who are not looking. We always start off in the Charles Schwab brokerage that people don't want to show you because they don't want to show you where they're actually at, because they are probably fabricating or fictitiously making moves. So where are we at? Currently, year to date, we are up 36% day change, and this is collectively throughout all the portfolios, and we're going to break that down because, as I've stated multiple times, my income portfolio, I am not so much worried about the growth. I don't care if that portfolio outperforms any of my metrics, but I will say that the only metric that I care about is Bitcoin. I measure in Bitcoin. I do not base my comparison against the S&P 500. I do not care about that market. It is horribly sluggish. It is slow. It underperforms Bitcoin by an order of magnitude every year. So that's not my basis. Even though we have traditional positions, we use stocks, we use high yield ETFs, I'm using all the tools because I am not yet rich. The basis of comparison is Bitcoin, though. So it either needs to produce income or grow faster or in alignment with Bitcoin. Otherwise, I could have just bought Bitcoin. The logic on that is very simple. I have found the best performing asset in the last 15 years, year over year. Why would I invest in anything else if I'm not getting that level of performance? Anybody who is not running by the numbers, who wants to dispute that, there's no math to dispute it. So the question is, why hasn't your portfolio outperformed Bitcoin then? Why hasn't your secret stock pick that you think is the greatest thing ever outperformed Bitcoin yet? Are you going to just keep talking about it for another decade of getting less than stellar performance? I'm personally not going to be a part of that. So everything that we are doing, all of the consolidations that we've made, even within the high yield, I want my income coming off Bitcoin because the income is going to be better. I don't care what the other things are doing. My barrier baseline metric is Bitcoin, which means if I'm not growing at least 20% a year, I don't want to invest in it. If I'm not going to get a little bit of leverage on top of Bitcoin's growth because I'm willing to ride those ups and downs because there are no straight lines up. You do go through dark ages. We have been reporting through the dark ages. I show you my portfolio in the red. Your favorite guru out there doesn't even show you where he's actually sitting. He just tells you things and then throws up prop accounts because you do. You can fool the masses. You can fool the bottom 90%. You can't fool people that are actually in the game. We see what you're doing. So all I'm saying is that's my basis of metric. I do not spew hopium over here. We spew reality. So we look at the numbers for what they are. Numbers are looking pretty darn good right now. Not going to lie. We had a little bit of an upswing towards the end of the month of April going into May. We are pulling this up. It's May 4th. I give myself till the 5th because these episodes air the first full week. So obviously it's Sunday, May 4th that I'm recording this. We're doing off hours after market recording, but I'm showing the actual numbers. I'm showing the actual portfolios. I'm giving the actual receipts. You at this point, you're using emotion to argue math. Those two things do not mix. So let's get to it, people. We're going to start off in the income portfolio. We got a little bit to talk about in the long-term holding portfolio as well. Also, we have switched our options trading portfolio. I don't have time to do that, and I don't have the amount of funds needed to do that. And honestly, when I do have the amount of funds to do that, that is going to happen in the in-home banking portfolio. But I am shifting from holding a cash position that I'm constantly reusing to just filling it in the in-home banking portfolio. That portfolio will be producing income as well. And specifically getting us to the goal of that portfolio is going to be to get us to a point to where we can self-fund everything that we want. So end game would be to have a portfolio that to have our daily driver credit card that we're getting points off of, which will be the Robinhood card. And basically behind that, backing it up with a really big in-home banking portfolio that we can borrow from as well and pay ourselves back with interest, because I am a fan of in-home banking. I am a fan of being able to self-fund projects yourself. I am not necessarily saying that you should apply that tool to everything. I don't think that you should be trying to do real estate developments, trying to self-fund it. I think it's horribly inefficient. If anything goes wrong, it's you and your money that's on the line. Literally none of the real estate magnates on this planet self-fund in that fashion for a reason. Namely, if anything goes wrong, it's all of your money that gets lost. You have no partner to help you get out of it. The bank is your partner at that level. So against what all the gurus say, the people who are bigger than them that own all the land and are doing the majority of the developments, not 1 and 2 houses at a time. They're doing whole neighborhoods, whole subdivisions. They are in partnership with the bank. Pro tip, throwing a gem out amongst swine, I know, but that's how the people who are real in the industry are doing it. And that's the reason why. So that said, I do like being able to self-fund, being able to go out and have an account that can fund you a cash car, or the way that I do it, have a car that you can pay off in, 1 to 3 years. You go ahead and get that 3-year note, 1 to 3 years, and have it kicking off the dividends to assume that payment for you. Being able to do your large purchase, being able to pay your house off out of that account. Those are the things that we're looking at, like your personal self-funding. Obviously, seed money for a business venture, absolutely. Out of that account, self-funding. You don't have to ask anybody. An account large enough to where if you needed to pay something off immediately, meaning you were willing to forego the opportunity cost of the income that that asset could produce, you can go ahead and cash out and pay it off immediately. Asset-backed debt. That's what we're moving towards over here in the Wolfpack. So let's jump on into the income account and let's talk about what we've got going on here. We are looking at an account summary. We are down 7.84%. Now, I remember, if you guys remember the last one, We were down well over this. We touched a peak of about down 30%. What did we do that whole time? We bought and consolidated. We also closed out a few small positions to get ourselves ahead of our interest producing debt. We are now into a state where we have our daily driver card. That's the only thing that has anything accruing interest that we are paying off either the majority of or in full, either in full or the majority of every month. Now, there are expenses that do come up that will push over into the next month, but we are not outside of those expenses. We're really kind of cut to the quick. Obviously, I have, I'm not doing any events. I'm not leaving the house, even though I am leaving the house in order of magnitude less because I've been grinding. We're at a space where we are definitely cut back to the quick as much as possible. And trying to get as much as possible into this income portfolio specifically. Like we're trying to clear debt and fill this portfolio up. Like I want this portfolio sitting at $50,000 to $60,000 as soon as possible, because once we hit those levels, the money that's going to be coming in is going to be, giving us a little bit of breathing room, paying off this debt faster. Once the debt is paid off, we are on a downhill trajectory. Oh my goodness, allergy season. Downhill trajectory, meaning that once the debt is paid off and I don't have to worry about the maintenance cost on that debt because it is asset-backed debt, that means that everything that we bought, we are now just running hard and in the green on. That means that there's no hindrance to us just fully unloading a paycheck into these income accounts and growing my income account. That means the transition over will be able to be completed. The other thing that I am looking at in regards to that is once those debts are paid off, they're going to start sending me those blank checks again, which means that I'll be able to redeploy those cash advances. I'm excited about that too, because then this income account, which already has like a very good base layer of money coming into it and generating money on its own, I'll be able to duplicate that. We rolled this portfolio out rather quickly using the cash advance method. Now that we have a basis of at least $1,000 to I'd say $4,500 a month coming in off this account, $1,000 to $4,500, redeploying those $10,000 cash advances is going to be nothing, and then paying them off in 5 months, just like I was previously, not going to be an issue, which then produces more income. I know a bunch of people like to do it in the margin off their account. We are currently doing that ourselves because we don't have access to the cheaper money. Margin's pretty cheap money, not going to lie, at least for me, in the terms of how I use debt. But those cash advances are even cheaper money. It's borderline free money with the way that we're utilizing it. We're not using it to go on vacation. We're not using it to buy rims. We're using it to build this portfolio. And now that this portfolio has a variability of $1,000 to $4,500 a month, that's a totally different game. We are so deploying that $10,000, like technically speaking, if that's all I have is that in my day-to-day, we might be paying it off faster than 5 months. I would probably push it out to 5 months just so that way I don't have to worry about, I'll be able to reinvest while I'm doing that. And then depending on how many different sources, because we have a couple of different carriers that we use that will give us that we can easily tap into $10,000, also gives us the ability to have that wiggle room. So I'm pretty excited about that. One of the metrics that we did complete over the last month, even though we did trim down some positions, was we got Misty to 1,400 shares. My original goal was to get to 1,000. Then I kicked it up to 1,500 to 2,000. But as the market is rebounding and, our portfolio is getting back in the realm of where it needs to be, I'm almost considering dialing back and only leaving it at 1,400 shares and starting the next position, because there's some other positions that I do want to get in this portfolio. And in order to do that, I need to not be buying Misty constantly. So I might dial off on buying Misty. We're getting close to I drug my average down. We're at an average cost of $27.27. At the time of this recording in the aftermarket hours, we are sitting at $25.14. Not bad. These are numbers I can deal with. I'm totally fine with being down 7% in this portfolio. That's nothing compared to the 30. And during the 30, we did not dump everything. We did not run for the hills. We went ahead and kept collecting our income. This was one of the portfolios that I did not worry about because it was still paying. Moving forward, we're going to be doing the same. We're going to be doing the same thing with any income generating portfolio. The expectation is not growth. The expectation is income. And I cannot say this enough for people. What I do like, what I have gotten into I've been spoiled getting into Misty because this was the reason I came over here. I've been spoiled in the sense that we are not experiencing NAV erosion with Misty. That is a bug, not a feature, which means I'm really not going to get that out of any other position. So what you're going to see is a lot of the stuff that I do in this portfolio specifically, I'm going to be focused on most of the things surrounding these these strategy positions, because those have the bug of not having NAV erosion. I can deal with dips. Price fluctuation doesn't bother me. What I don't like is a consistent whittling of my buying power. That bugs me. I don't like to see the capital erode. I don't like having to drip the position in order for it to do what it does, because if you're going to do that, if I'm going to do that to keep the position, the initial investment from whittling away, well, A, your initial investment is whittling away. B, you are putting yourself in a position where you're in this infinite doom spiral to where it's like, okay, so like at what point do you get to live off of this money? And C, why didn't you just buy the underlying asset so that way your nugget that you're paying to not lose now, if you're using all of your dividends to do that and it's going nowhere else, like that just seems kind of pointless to me. Like the math doesn't stack out on that, because these products are built to underperform the underlying. They're built to produce assets. When you get into this space, and this is my personal opinion and the way that I look at this income account is a business line for me. That's what I treat it like. If I can't make money off of the money that it's generating, there's no reason to have it. I would be better off just putting all that money directly into MicroStrategy and just letting it grow. I personally do not believe in just having to eat your portfolio to retire. I also think that's stupid. I believe that you have to use all of the financial tools. So this is an income tool. We are making money off of this income, which brings us to our next fund, which is our long-term holdings fund. Let's take a look at that. Now that is up at present 11.48%, and it is marginally different than what it used to be. And we're going to talk about it. So what do? Our DeFi Technologies position, we did have to clip that. We are trying to pay off some debt. My Sol Strategies position, I did also clip that position. We had a 16% profit. I went ahead and clipped that in order to get into position on my CEP, the Cantor Equity Partners. I put out a notice on this. I put out posts on this. If you're not with me on social media, like I do telegraph my moves. Like I did a video on this the week that I did the buy-in. I did a couple of other things in regards to talking about this. Like I wouldn't shut up about it. I was excited about it. The 21 Capital, that is going to be part of my Bitcoin strategy in conjunction with MicroStrategy. I am also planning on picking up Metaplanet shares. I do want a diversified Bitcoin traditional finance strategy. So we're going to pick up some Metaplanet as well. I also am starting to backfill my portfolio with Strike. which is the MicroStrategy income, the 8% that could either be distributed in additional shares of MicroStrategy or cash dividend, just kind of as a balancer. And then I clipped my LFGY position specifically because it was a smaller position, and that was part of the debt repayment strategy that we did. But I will be re-adding that to get some income into this portfolio at a certain point. But what we are doing moving forward is we are going to have 10% of whatever my MicroStrategy position is, I'm going to have in strike. So basically, as I do a MicroStrategy buy, basically every share that I buy, I'll buy a share of strike. CEP, we have a target of getting to 100 shares. We are dollar cost averaging that. I'm hoping to get those buys in a fashion to where by the time they do the transition, we are close to 100 shares. But our target for that is to have 100 shares. We will also be looking at the income products that will likely come, provided they produce the same volatility that MicroStrategy has. And, you know, hopefully if they do half of what MicroStrategy does, we'll be sitting in a really good spot with 100 shares of CEP just in the hopper. And we'll be able to, you know, make some moves off of that. The long-term portfolio is being funded both by, obviously, W-2 income. We're setting some money aside, but we are also to a point now to where our dividends are getting funneled over into this portfolio. So this portfolio will see some growth. Another move that we make, we got our 10 shares of MicroStrategy back. We did the MSTX play, got 20% on that. I clipped it early, but you know, it's a levered long, so we kind of play that how we play it. Moving forward, we will be using MST in its place because that is a 2x levered long that pays weekly income. Maybe in conjunction, but most likely in its place because it does what it needs to do, and we can collect some income on the run-ups. I'm here for it. So we'll probably be seeing some MST filtering into this portfolio as well. So now that we've got all the portfolios out of the way, well, actually, I guess we could do the in-home banking. There's not much going on in there right now, but as we pay ourselves back, because we have some outstanding funds, this will get up to about, I think, $2,000, something like that. We are doing the IMST is the position that we're doing in here. So as we get this portfolio going, this is going to be highly experimental, but we'll see what it does. We're going to just fill this with IMST, let it build itself up during the run up for the bull run. We're going to collect that income, see what that looks like. And yeah, that's just going to be what the portfolio is. So moving on, we're going to share the next screen. I actually had to, so you have to I manually went in and fixed this. So I uploaded the transactions from my Charles Schwab account. As we can see, this is a little bit different than what we were looking at over in the Charles Schwab, and there's something going on because both of my Snowball Analytics portfolios are off. Like they both have way different variations of what these positions are worth. But the holdings are accurate. So it's got my 1,400 shares, but like that's where the differentiator is because it is holding them at a total of, let's see here, 35,196, and right now they're actually worth market value 35,196. Cost basis is 38,173, and this has our cost basis at 37. So it's a little bit off on the cost basis. But right now it's sitting at a total profit of 55.5% total profit, which is nice. But I'd say that we're probably actually at like 45. So actually, let's just take away 15% and we'll overtake away the percentage. It's up 40% total profit, which is awesome. Question being, what did you do with the income that was generated? Well, we paid off debt and we started our long-term holding portfolio. So I can't complain about that. The other thing that is important for me and the reason I use this software is projection out. So at present, we are looking at about $2,000.26, 26.49 cents monthly. Now, this is tied specifically to the income portfolio. This does not include the Robinhood portfolio that's based around our Robinhood Gold credit card, which would put this at about 26,000, which is cool. I am not complaining about that at all. That puts us at a daily income of $66.62 and an average yield amount of 69%, which I'm not complaining about either. And it shows me, it looks like in August, we are going to have a wild month. Let's see what they're projecting out in August. So August, we will get paid twice for Misty. So that's where the big jump is there, is we get 2 Misty payments in August. So August is going to be a big month for us. Like, I'm excited about that. We get paid right at the beginning, and then we also catch another one throughout the month. So like, this will be a good month for us, especially if we are at a higher metric and higher payout than we are now, which I'm hoping we will be. But as it sits right now, they're projecting a $1,900, which basically all my payment is Misty. It's basically what it is. So I think that we will likely be a little bit above that. I think we should have that payment should be about 2,000, in my opinion. We'll see, but that's kind of what I'm looking at. I think we should be at around $2, and yeah, we'll see what we can do with that. Moving forward, we're going to be hopefully getting another position started. We will not be trimming the portfolios anymore. Hopefully, I've got some money that I'm dollar cost averaging in from my crypto sell-offs that we had to do because we had to trim out of the traditional finance portfolio, and then we also had to trim a little bit out of our crypto portfolio. It was across the board trimming to get a little boost on our debt payoff. Moving forward, we're not going to have to do that. So we will be looking at, though, the money that I'm dollar cost averaging in for the rest of my crypto payoffs. I am looking at, obviously we're going to collect the income off that, but after about 3 months, we're going to reevaluate. And if needed, we will trim those specific shares. And I am tracking those shares. So like, those are getting an earmark, just like some of the rest of the positions that we had. And we will, if needed, those are the shares that are going to get done in and clipped out, and we will sell off some of our Misty because we're over our target anyway. And we're going to be buying a few more buys of Misty as long as it's under our average. And if we need to, we'll clip them. Outside of that, till next month, people. Hope you guys got some value out of this. I want to hear about your guys' portfolio. How did you guys do in the month of April? It's May now. Weather's beautiful out so far. I'm excited, here for it. But tap in with me. Don't forget, hit that like. If you haven't already and you've been here more than 2 times, go ahead and tap that subscribe. And don't forget to share this with people that you care about or people that you don't care about, because we're not trying to get rich by ourselves over here in the Wolfpack. It's been another episode of Portfolio Updates. It's your boy, Reckless Ray Dinero. And until next month, we are out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't blame it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.